So you guys see the wealth shift strategies that you still see?
No, I don't
Yes,
see.
I can.
Do you see it? Okay, yeah,
I can
we'll
see the
shift
worship.
strategies.
Perfect. Thank you so much. All right, so we got how many people do we have on right now? Is there like a waiting room? I need to like find a way to kind of actually just stop the waiting room from happening, just get people in directly. But do you see anybody in the waiting room? TK?
No, there's nobody in the waiting room right now.
Okay, so give about 5 more minutes. You can entertain Conley. Well, maybe you can entertain us in the gym. I don't know how you do the afternoon gym, man. It's impossible for me. You got to do it in the morning.
Well, that was the easiest time for me.
The afternoon, huh? Okay.
Yeah, I'm telling you.
Okay, I got Quebec iPhones. So, Kike, you have to, or listen, please make sure welcome everybody. Just let someone in right now. Hey, Quebec, how you doing?
Good, good.
Good stuff. We're just giving about 3 more minutes to have more people join, and then we'll get started. Hello, Grady. Hello, Grady. How you doing? Just wait for about another 3 more minutes to get everyone started here. Looking forward to a very important session today. This is very, I think it's actually more needed now with all the interest rate, the confusion in the market. Having this seminar, this webinar is very important right now. So I'm looking forward to delivering this and answering some of your questions. We'll give it under 2 more minutes. That'll be 6:05, and then we'll get started. And as people join us, we just have them participate in the webinar. Thank you, guys. So it's 6:04 right now. We're going to give it another 1 more minute, and then we'll get started. I think we have more people in the waiting room. Hello, Vanessa, Alicia, Grady, Kunle, Quebec. As with more people, I think it's really, like I said, it's a very important session we have today. Because one thing I've learned about investing and building wealth is that investing is counterintuitive, right? Most people, you kind of have to do the reverse or the opposite of what you really want to do to really succeed in investments, right? So the direct way is not always the best way. So for example, I was talking to someone yesterday, and they were saying how, even though I don't advocate investing in crypto, the person was saying how crypto is dead, how investing in crypto is dead. And 2-3 years ago, crypto was hot, and that was the time to invest in crypto. I'm like, well, that's the exact problem, right? Investing is counterintuitive. When crypto is dead, quote unquote dead, it's time to invest in crypto, right? When it's hot, it's the time not to invest in crypto because it's hot, right? It's time to kind of hold or sell. So people tend not to understand that about investing, about real estate, is that it's always very counterintuitive. Another telltale sign is that when there's uncertainty, when things are very rough, things are not clear, it's the time to invest. Right? When things become certain, you've missed the opportunity, you've missed the boat, right? So when the world Iran thing first happened, everyone went on hold, on panic mode, and no one is investing because things are uncertain. We don't know when the war is going to be resolved. That's the time to actually invest because all the asset value were coming down. Stocks were down 10-15% in about a month, and so on and so forth. But as things get clearer, and we know without seeing the end to the war, you've missed the opportunity, right? Because when you say I want to wait till things get clearer, you've missed the opportunity. The opportunity to kind of go in aggressively, knowing that eventually things will clear up, right? When COVID first happened, everything went to craps, right? That's the time to invest and also to engage. Anyway, good afternoon, everyone. It's 6:06 p.m. I'm going to get started. I need someone as my sounding board because it's kind of hard talking to yourself over and over again. So who wants to volunteer to be my sounding board? Can I just kind of check to see if you're hearing me well, you're asking questions, those kind of things. Who wants to volunteer, please?
I don't mind.
Alicia, thanks for stepping in. Thanks for stepping in.
Of course, of course.
Good. Just a quick brag is the importance of always volunteering. So today, I don't know if most of you know, I'm on the board of the Fort Bend County Tax Increments Reinvestment Zone. So when tax get increased in Fort Bend County, and they want to decide how to invest it, I'm one of the board members that help decide how to invest that money, where the investment go, who the reimbursement, and those kind of things. And today, I was elected the chairperson of the board, right? So kind of the leader for the board of Fort Bend County Precinct 4 Tax Increment Reinvestment Zone under Commissioner Dexter McCoy. Alicia, you're muted. You want to say something?
Oh, I was going to say congratulations. That's a huge flex.
It is. I won't say flex, but it's a huge deal for me. I just kind of give back and help our community out. So as we're getting more investment opportunities, I'll be make sure we're pushing that out to everybody to know where the smart money is going. So as I talk about smart money, thanks, Quebec. So let's go into it. All right. So here's what we're covering today, right? We're covering the current. Wait a second, guys. Okay, the new reality, right? Interest rates are high, and in all indications, they're going to be higher longer. And most people's, again, first intuition is, I want to pause investing and wait till things clear up, right? And as we said, that's not the right thing to do. Whether you like it or not, rates are high, inflation is here, everything's getting more expensive. And when you stop investing, you actually lose money faster, because now you're not investing. What you need to do is, instead of stopping investing, can you invest in a place where you can enjoy a higher rate of return than inflation? Previously, you could just invest in anywhere where we have 0% interest and you make money. Nowadays, those days are gone. You need to invest in places where you can actually get a higher rate of return. So the old playbook is dead, right? You need to new playbook where, one, you can't sit on the sidelines anymore. You got to be counterintuitive. Two is, can you look for places to invest where you can beat the inflation? Inflation is a real threat. There are three wealth buckets I'm going to discuss today, right? So that's where the smart money in the room are moving their money. I'm going to discuss the three wealth buckets where they're moving their money today. Talk about Houston market, right? Why Houston market is prime opportunity to actually think about investing, especially in a high interest rate environment. And we'll now go over your action plan today. Okay. Any questions, Alicia, or anybody?
No questions right now for me.
Okay. Anyone else? Okay, good. So talk about the new reality, right? So as you can tell, the Federal Reserve current interest rate is about 5.25 to 5.5%. That's called the Fed funds rate. The mortgage rates are higher than that. The borrowing rates for other things are higher than that, but that's kind of what the interbank Federal Reserve lent to other banks. Inflation started to go a little higher in the past 4 years. 10 years ago, about 10 years before 2022, we were at pretty much about a zero interest rate environment. That's when we were getting mortgage for 2.5%, 1.845%. Those days are gone, right? Rates are staying here longer. The dates of low interest are gone for now, and investors that can reposition and move their money and strategize will be the one that will actually benefit. The ones that wait, trying to see when rates will go down, will lose, right? Very similar things happened during COVID. When COVID first happened, no one knew what was going on. I told my clients, jump in now. Jump in when there's uncertainty. Jump in when everybody's confused. Once certainty happens, once we knew we were coming out of inflation, prices ran up and everything became unaffordable. And people that bought in 2022, 2023, 2024, and 2025 are sitting on no gains right now. The gains happened in 2020 when there was disruption in the market. And with the current war and the current high interest rates, the changes are happening now, and it's time to actually lock in the gains before things stabilize again. Okay, next slide here. All right, so here, inflation is a silent killer. And our job as investors is, how can we beat inflation and do more? So for example, with the current inflation rates, right? If you have 100K and you don't do anything with 100K, every year your 100K is losing 2.5% every year on real purchasing power because of inflation. Cash is not the way to go right now. In times of low inflation and low interest rates, you can go with cash, right? Because your money is not losing value faster. But in terms of high interest rates and high inflation, you need to put your money in real assets, which we're going to cover. As you can see here, after 5 years, your 100K is 85K. After 10 years, it's 73K. After 20 years, it's 54K. And after 30 years, it's 40K, which means that you need to constantly be beating the current inflation right about 3% in order just to stay even and stay even across the board. All right, so cash and savings accounts is not good. Real assets beat inflation every time. So real estate, commodities, dividend stocks, and so on and so forth. And time is the real cost. So waiting 1 year to invest can cost you more than fees or commissions. So investing right, investing in the right asset is the way to go, not waiting. Questions, anyone? If I go to the next slide. Questions, Alicia or anybody else?
No questions for me. You can go to the next slide. And I
Okay.
don't see anything in the chat.
Okay, and if you have questions, please feel free to put your hand up or put it in the chat. If you want to pause and ask questions, I always appreciate questions because it makes everything flow better, right? So I'm not just talking to myself or talking to a screen. So please think deep and ask some very insightful questions. Okay, good. Why must you invest? You must invest no matter what, right? Not investing is a decision, and it's the most expensive one you can make, right? Inflation generally will outpace your savings. So leaving money in savings account is the wrong way to go. Is there someone there that Kike, who's there? Okay. Leaving money in savings is typically the wrong way to go, right? And having real assets that actually have a track record of outpacing inflation is the way to go. Stocks, some treasuries sometimes, real estate, and those kind of things. And time, we've all heard this, time in the market is more important than time in the market, right? So people that start invest in the bad market, for example, in the 08-09 crisis, everything was over the place, we're losing jobs. People that invested then made more money than people that waited for the quote unquote right time in 2011 when things have stabilized, right? So right now that things are supposedly uncertain, it's time you want to go in. Okay, here are the 3 wealth buckets that smart money are moving their money into right now. The first one is real estate. Okay, this is your core wealth engine. Real estate includes things like cash flow, appreciation. We have depreciation for your tax benefits, 1031 exchange. And right now, cash flow is more important than ever because cash flow is a true try the way you can know, am I beating inflation? Is my cash flow exceeding inflation, right? So real estate is the number one. Number 2, leverage. Leverage in real estate helps you increase your returns, right? So we all know how that works, right? If you have 70K to invest and you invest in a property worth 350K, you put down 70K down and you control 350K. If that 50K goes up by 10%, that's 35K, right? If it goes by 20%, that's 70K. But all you've done is put down 70K, right? So your leverage of 70K is controlling a higher value of return, a higher 350K. And that's one of the big key drivers why real estate is actually more powerful than stocks and other instruments, because with a smaller amount of money, you're controlling a bigger investment size. Whereas for most stocks, you put down a certain amount of money, you buy a certain amount of money stocks, right? That's what you do. Now, real estate and private businesses gives you leverage. You can also buy a private business with 10% down and watch the actual bigger value go up and up and up in returns. Of course, real estate also has a significant tax advantages called depreciation, 1031 exchange, and other kind of things. And real estate, by its nature, typically has an inflation edge built into it, because as it gets more expensive to build more real estate, the value is going up. Private businesses, I also love private businesses, right? Because also they also have the highest return potential. Most private businesses will give you a 25% return annually or more by default, right? Most private businesses will give you a 25% return or more by default. If you're just joining us, please mute your call. I think that must be Kike on the background. All right. With private businesses, you also control the outcome. With private businesses, you have cash flow from day one. The issue with private business is that it's actually harder to do. You need knowledge in the business you're acquiring. You need more grind, more grit, and to be a good operator to do well with private businesses. But they're also very fantastic way to do, and a lot of smart money is moving to real estate and private businesses right now. The third bucket is the financial instruments, right? Treasury bills, CDs, dividend stocks, ETFs, and those kind of things, or individual stocks, bonds, some put in crypto and those kind of things. And smart money is going there right now as well because they're very volatile right now. They're very uncertain. And when they have that uncertainty, it's a time to kind of go in. Most people go in with what they call dollar cost average, right? Every week they put more money, right? Every week they put more money. Every week to kind of help you have more time in the market than time in the market, right? Financial instruments are very liquid. That's what we're discussing about them. You can sell easily. You cannot sell private businesses easily, and you cannot sell real estate very easily, but you can sell financial instruments very easily. You can sell it with the amount of seconds and get your cash out of it. And then overall, it also helps you reduce your overall volatility. So quite frankly, these three buckets are where the smart money is moving today. And these three buckets is where you, as smart money, should be going into. Not just one, not just two, but all three. Obviously, if you can get into all three, because the private business is very hard to get into, you can do the two, real estate and financial instruments, right? Staying in cash alone is not the way to go. You want to have some cash, right? You want to have some cash for to have dry powder and to have enough money to redeploy and for emergency funds. But the big bulk of your investment should be in real estate, financial instruments, and then maybe private businesses. I want to pause for questions. I've said a lot, right? Without questions, we're not moving any forward. Alicia, Quebec, Mikun, Alan Duze, welcome. Collins, Grady, Kike, Kunle, any questions?
So if you were coaching someone into investing for the first time, they haven't seen any or made any type of investments, where would you start? Which bucket would you recommend?
Very good question, right? I will recommend, if it's a first investment, I recommend to do two buckets together, right? I recommend the financial instruments bucket and I recommend the real estate bucket. And why would you actually do those two together? For real estate, if you don't own your personal home yet, you want to start with that, right? So you definitely want to start with that as your first investment opportunity, because for most people, we have a cost just to live somewhere. We're paying 100% cost, 100% expense to live somewhere, right? So I will start that as your first investment vehicle. Then with financial instruments, if you don't have a retirement account, individual retirement account, a 401k, or some of those sorts, you have to do those two things, that as well too. So retirement account in the financial instruments and real estate would be my first choice. Then the next thing is to build some sort of emergency funds, 3 months to 6 months of expenses. If you already have that, you want to go to the next level of investments, which is potentially in more real estate or more financial instruments. Now, if you have access to private businesses, I'll say you go there as well too. And we can talk more about what type of real estate you go into after your primary home, and talk more about what type of financial instruments you go into after your retirement accounts. But this is the place I'm going to start for us is your primary home, your retirement account, investment in real estate, and then additional financial instruments investments, and then go into private businesses. Great question, Alicia.
Perfect. Thank you for the answer. And I'm excited to hear about the next part of this where you talk about, once you're done, if you already have a primary residence, what's the next, investment or the next step?
So, any other questions before I continue?
Good here.
Okay, Quebec. Okay, you good, Quebec? Excellent. Mikum, any questions? Vanessa, Collins, any questions? Alan?
No
Yes.
questions.
No questions at the moment.
Okay,
Uh,
Kunle,
I'm
you're
good for the
muted.
moment.
None from me, sir.
Okay, perfect. Okay, moving on next to the next slide. So here are the, let's start with real estate first and then go into the other vehicles. So once you're done with your primary residence, the core part of your next investment bucket should be real estate, right? Again, not investing is not an option, right? And there are three ways I want to recommend to invest in real estate today. There are other ways, but here are my three big ones, right? The first one is look for cash flowing properties. Cash flow is never the game, right? If inflation is going at about 4%, you want your cash flow above 4%. If your cost of borrowing, so if your interest rate is 7%, you want a cash flow above 7%, right? You want to make sure you are not winging it. You don't want to wing it. You don't want to say, let me just see what happens, right? You want to ensure, if you're working with any realtor or broker out there, is can you get me a deal where my cash flow is above 7% of my investments? That way I know if I'm borrowing money at 6%, 7%, I'm making money on the borrowed money, not losing money, right? So cash flow properties, make sure your cash flow is above your cost of borrowing and above inflation. Number two, buy below market value, right? Tell to anyone you're discussing with right now, if you're going to buy real estate, do not buy any property that's appraising for the contract price. Even if I'm your agent, make sure say, hey, whatever property you want, I want a 3%, 5%, 10K, 20K, 30K below appraisal value, right? You make your money going in, not coming out, okay? As you can see here, it says target 8 to 10% cash on cash return. That's your return. 8% is probably the minimum right now. It's hard, but it's doable. That's what you want to go for. Screen for positive cash flow on day one. Avoid break even. You don't have to invest there. Keep looking, stay patient, and get something good. Next thing is short-term returns, short-term rentals, right? So Houston tourism is getting bigger. There's more demand in Houston right now. So look into short-term rentals. Short-term rentals kind of give you higher returns than long-term rentals, right? So another way to invest now is to look for short-term rentals in real estate. Look for 2 times the monthly income. The short-term rental will give you 2 to 3 times the monthly income versus long-term rental if you do it right, right? We have some short-term rental consultants affiliated with our company. They don't work for us, but we recommend them. We can refer them to you. Say, hey, before I buy this property, can you help me determine if it's a good short-term rental? What my cash flow? Don't just guess. Don't wing it. Run the numbers before you buy the short-term rentals. Airbnb, VRBO are looking great right now. Obviously, they're higher in operations than a normal long-term rental. So you need a manager or a system that will make sure these short-term rentals make sense for you and give you the returns that you need. And then finally is to buy value-added deals. Quite frankly, you want to use value-added deals right now and combine that with cash flow properties to make sense of your investments, right? So we have called buying distressed properties so you can force the appreciation. I say look for a bad situation, not a bad home. So someone that's going through a short sale, foreclosure, you can buy this kind of homes. They could be good homes with just a little paint here and there. We can buy for 100K, 50K, 60K, 70K below the value, and then you force the appreciation from there. There's what they call the BRRRR method, right? BRRR method. Buy, renovate. So buy, repair, or renovate. Refinance. Buy, repair, rent, refinance, repeat. Thank you, Clay. Clay's an expert in this already. Buy, renovate, rent, refinance, repeat, right? BRRRR method. That's a very good way to go into deals and buy them under value, put some money into it, get your money out of it, and keep doing the same deals. Just try not to be over leveraged, right? And so these 3 ways are what I would say is a way to go into real estate once you've already owned your primary home. You can go with any of these three methods or all three methods, right? Use your value add to buy undervalue. Look for cash flowing properties at 8 to 10% cash on cash target rates because cost of borrowing is about 6-7% right now. And look for short-term rentals to see if you can increase your cash flow. I'm going to pause for questions before we go into the next one. Pausing for questions.
I think what you said about if you're buying a property and making sure that it's appraising maybe 3 to 5% before that appraised value, I think that's a really good idea. Because then you're cash flowing right from day zero. I made a mistake in 2022. I mean, it was just at the mark, and now I'm a little bit suffering. I was like, oh, this would have been trying to target a bit below the appreciation, the appraised value. So thanks for that.
Absolutely. You know, for the most part, thank you, Kobe, for that. Most people that bought a home from the second half of 2022 to 2025, unless they follow this strategy, they're underwater right now. That's why I'm advocating for this strategy. You can still buy, but don't buy on speculation. Don't buy without doing your due diligence. And don't buy anything right now that you want to use for investment at market prices. Your personal home, perhaps, right? But make sure whoever professional, mortgage professional, real estate professional, that you're using to help you with your real estate investment, you emphasize to them that you need to buy something that has equity going in, because equity has been flat for the past 3 years, and obviously 3 to 4 years. And obviously this inflation is high, which means we are all losing money, not only in not getting equity, but also just in inflation right away. And the way to beat that is to make sure you're acquiring things that are undervalued, both real estate and other aspects of investments. So any other questions before I go to the next slide? Any other questions? Alicia, Allen, okay. Going once, going twice.
No questions for me.
All right, excellent. So go to the next slide. Here, now we're going to talk more about why is the Houston market. I'm going to roll right into financial instruments. So Houston is one of the fastest growing population in Houston, fastest growing major U.S. city by population. 100,000 new people move to Houston annually. There are no zoning. And it's also top 3 markets in rental demand growth, right? So rental is pretty high in Houston. Houston has one of the most discretionary income of a big city. Houston actually is number 1 big city with a high discretionary income. So it's a great way to invest because it's a bigger market, a bigger demand for real estate, for investments here in Houston. Also, Houston has no state income tax, right? It's the energy capital of the world, medical capital of the world. Homes are affordable here, and there are great deals to be had. Great deals. Houston is expanding, it's sprawling. Great deals to be had, especially nowadays in new home sites, right? So if you're looking to invest, if you look for a desperate new home builder that's about to go into their quarterly earnings or annual earnings, and they need to sell homes, they're getting homes out in real discount prices. So, I mean, most of my best deals in single family have been in new home builders that say, hey, Victor, or whoever it is, we are leaving. We have 6 more homes left in here. We can't put any more resources in here. Do you have any buyers that want to buy this property? We're giving them a good discount to get rid of it right now. You can go in there, get the homes at an undervalue, and you get good rental income from there. Josephine, I see you have a question.
Yes, I was trying to ask, but I think there was something going on. This is relating to the previous one. So for if you want to, buy a new home and use it as a rental, what's the best way to make sure that you are having that appreciation built into it?
Very good question. So with appreciation, it's very hard to target because appreciation is kind of trying to figure out what the future holds, and nobody knows what the future. So the best way to do it is to buy something undervalued today, right? So I think that's what Quebec was saying earlier as well too. You want to talk to whoever and if you need to get with any of our realtors or loan officers, please put your contact just say contact me in the chat, and Alicia will have some reach out to you tomorrow. But the way to do that, Josephine, is to buy right, right? It's hard to figure out a place to buy right, one, and buy during times of uncertainty, right? When there's uncertainty, sellers are nervous, right? It's a buyer's market right now. It's not a borrower's market, it's a buyer's market. So go in there and say, hey, I see your home. I want to buy it. I want 30K, 40K, 50K below appraisal value is the way to go right now. And then the appreciation will take care of itself. Like for the past 4 years, there've been very, very limited appreciation in the Texas, Florida, in the Sun Belt area. But if you bought right, ending something in that period, you're still sitting on equity and you're still sitting on good cash flow, because your cash flow also depends on what you buy it for. If you buy it for too high, there's no cash flow. But if you buy it for good enough, the cash flow will make sense by itself as well. So it's always very important to buy right and follow any of these three strategies when you're buying.
Okay.
Can I answer your question?
Yes, sir. Thank you.
Welcome. You bought a property recently, Josephine?
No, I bought it back in 2023, and I bought it right, but by God's grace, I was able to cash flow and stuff. But I'm looking for my next deal, and I don't have, like you say, you're one of the things, buy distressed property, fix it up and stuff. That's the best way to do it. But to be honest, I don't have time, and I don't have the. Also, I don't have the expertise, right? And I heard nightmares with contractors, so what I've been mainly focusing my attention on is trying to buy a new construction. But I was trying to see what's the best way to go about it to make sure that I have built-in equity. And you just gave me an idea about it.
Absolutely. And Alicia can also follow up with you tomorrow. She's our team lead. So there's two ways I would say you should do that, right? One, new construction, will look for the desperate builders or the ones that just need to offload some properties and going very aggressively.
Okay.
Number two is, you're very right? Most of us don't have time to buy a dilapidated property and then hopefully we can get somebody to kind of fix it up for us, and they will cheat us, take our money and run away. So I always say you don't look for bad properties, you look for bad situations.
Okay.
Right. So when the builder is desperate, it's a good property, which is a bad situation. Right. When somebody wants to sell their home at a short sale, property is still good. They might still even be living in the property. It might be a 2-3-year-old property, but it's a bad situation. Right. Foreclosure. Right. Those kind of things which you look for, and we can help you find something like that where you're going in with great equity, going in with great cash flow, and just capitalizing on a bad situation and helping save that person, save that builder, and make money for yourself along the way.
Okay. Thank you.
You're welcome. Any other questions if I go to the next slide?
Yes.
Go ahead.
So this is more of a loan question. So if I get a property for subject to property, I don't know if you've covered that or if you're still going to that, but is there a way?
But go ahead.
Is there a way I can cash out from a sub to property, or what would be a way to cash out the equity on a sub to property? And sitting on a 3.1 interest rate. So what would be your advice for that kind of situation?
To cash out the equity, right? Okay.
And then put it on something else like another property and all of that.
Well, so it will be tougher in this market if you have the 3.1% interest rate, right? Because for you to do that cash out, you need to pay out the current lien that is still in the name of the seller, right? So because of that, it'll be difficult without refinancing the entire portfolio. So what I would say we could do is, you might not get 3.1, but maybe you get 4.5 interest rates to refinance the entire portfolio and get some cash out that way. So we can help you with that, right? Unfortunately, let's say it wasn't a subject to, and you own the first lien, we could do what they call a second lien loan for you and lend you money on just the equity you have and preserve the 3.1% interest rates, right? We can do that part of it for you. But what is subject to, most lenders that will do it for you will want you to actually clean out the loan of the seller. And we have things like adjustable rate mortgage, a 15-year mortgage, or rate buy down. So you can see, can we use those things to help you tap into the entire equity and clean out the current seller? But to do it without, just to do a second lien without cleaning that out, I don't think most lenders will let you do it. Hope that answered your question.
Yes, but I guess I'll probably reach out to someone at Gazette to see what my options would be. So
Correct. Yeah.
thank
I
you.
mean, I think rates is kind of be going down this past week, right? The last 2-3 weeks it went up, but we've seen kind of ease up a little bit this week, right? So, and someone Gazette can also help you give you real-time rates on a daily basis, or those kind of things. Make sure if it's the right time. But that's probably the best to do is to do. Can you do a second loan? If we can have a lender that will let you keep that subject to loan, right? That will happen. Quebec, you had a comment there, Quebec?
No, I was just saying that for his situation, would a home equity line be appropriate?
A home equity line, will not be appropriate for him because home in Texas, home equity line, which is home equity line of credit, is only eligible for your primary home, not for the investment property. And the property he's talking about is a subject to property, which is also an investment property. So a home equity loan will work for that. That's what I was recommending, but that will actually clean out the entire balance of the loan and refinance the whole loan all over again at a slightly higher interest rate. I'm sure he's trying to avoid that higher interest rates. All right, going to the next slide here. I think for those questions, just to fin and tie. So the next thing is the second bucket is private businesses. So this has the best upside, right? One of our producers in the office, Andy Airbook, can also help you acquire private business if you're interested in this. You usually require 10% down payment or more, but we see returns in the 20, 30, 40, 50% if it's well structured, right? You own a portion of a cash generating operations, and there's a lot of value in owning your own private business, but it requires you to be a good operator and have time for this. It's very high risk. And SBA can help you help you get with a loan. We can help you with an SBA loan. We did that as well. You can raise money and do a syndication among you and your friends. You can do angel investing. You can also have a minority stake. Say, hey, I'm just gonna throw a name out there, a Mikun, a Rich. I know you have a business. Can I buy a minority share of your business? Your business is worth $100 million. Can I give you 200K today? I'll buy 20% of it. You get a slight liquidity. It's called a liquidity event, which you get money now, a bulk money. Instead of getting your normal cash flow, get bulk money today. And then going forward, we split the profits. I get 20%, you get 80% going forward. A lot of business owners are open to that. Say, hey, they just want a quick liquidity event. They don't want to stop running the business. They want to keep running the business. They want to keep doing their thing, but they want all liquidity events or part of it. So you buy a minority stake. They keep the business owner keep a majority stake, which also incentivizes them to keep running the business the right way because they're still a majority owner of the business. There's another way to kind of go into private businesses, or you be a partner and operator where you provide capital. So we can help with due diligence with that. We normally verify cash flow for the past 3 years. We understand the competitive position. We go over the key person to see would they keep running the business properly, or you can hire an operator. So it's a very good way to actually invest in a high interest in an environment because private business will give you very high returns compared to real estate and compared to financial instruments. Any questions about this? I'll be very disappointed if we have no questions. Going once. Kunle. Going twice. Alicia. Okay, that's Alicia on here. Going thrice. Next to the financial instruments. All right. This is also very popular. These are the two big ones, real estate and financial instruments. And for most people, we do this wrong, right? we almost all of us go into the financial instruments when things are hot, when they're high, and we get out and get discouraged when they're low. And it's understandable because it's human nature, right? When crypto is low, we ignore it instead of going into it. When stocks are low, we ignore it. We think the future will continue to be low. And when they are high, we think the future will continue to be high. Same thing with real estate as well, too. So the difference here is that I always recommend going with what I call a dollar cost averaging. Don't worry about it when it's low. Don't worry about it when it's high. Just put more money and put more money every week or every month. Just add the same amount of money. And you want to keep a pile of money and go in aggressively when things are low. When you see uncertainty, when you see things crashing, you go in more aggressively, or you increase your dollar cost average at that point in time. But it's very important to have money in financial instruments, definitely with your retirement account and your personal for your real estate and then real estate investments. And then you can start out doing more. I always like to have a balance because the financial instruments also has a lot of liquidity, right? You can get in and out easily. It's good and bad. But sometimes you need some cash, and having this there helps you from having to sell other assets like real estate or businesses because you need cash. You can always tap into here to fund your deal. So we have different things like CDs and T-bills. They're doing, 5% is not bad right now. It's still above inflation. Money markets is a little higher. Dividend stocks, the value of stock is going up. You're still getting high yield. I invest in SCHD. This is Charles Schwab high yield dividend right here. Very good. Gives about 4 to 5% dividend, and it still goes up. I think it's been up about 20% this year, in the past 1 year, plus another 4 to 5% in dividends you're getting here. And there's also private credits you can use to get more money by loaning people money. So here's some ways to go into financial instruments. Lastly, the best, smartest mind say just investing in index funds like IVV, VOO, and those things, VTI, are the best way to invest in this without trying to chase the right company, unless you know what you're doing and you know how to do it. It takes a very special temperament to invest in this compared to real estate. So if you want to learn more about it, just let me know. Shoot me a text. I can sit down with you and kind of discuss more about it with you. But a very good way to also invest is in financial instruments and real estate. I'm going to pause for questions. Well, we've been going for 45 minutes. I got to go a little faster. I didn't know. I guess we're having fun. Any questions? Alan, Josephine, Ty, Kunle, Mikon, Quebec, Rich. Okay, moving on to, I'm going to move a little faster now because I didn't know time was going that quick. So now right now, back then, the goal was to buy more growth stocks, more crypto, over leverage, and those kind of things. Nowadays, it's very important to focus on cash flow, right? Because rates are high. We cannot speculate too much on appreciation or on stocks going up. So make sure you're buying undervalued assets. So buying with equity going in both stocks and real estate, and having positive cash flow is the way to go. Okay. So as I said, so cash flow is the right strategy, is the way to go right now. Use today's rates. Don't plan for low rates, which means that if rates are 7%, make sure your cash flow is above 7%. This is 8%, 9%, 10%, right? Use a good due diligence. Stress test your deal, right? Look at your deal. Look, what's the worst case scenario? Do I have enough capital to take care of this deal for the next 1 year, 2 years, in case things go wrong in the economy, in case Iran and America go longer with the war? Do I have enough capital to wait it out, right? So make sure you test your deal, and then always look to invest for the long haul, 3 years, 5 years, 10 years. Look at this investment in the next 3 years. Will it still make sense before you go into it? Again, if you want to talk about any real estate deals or mortgage or anything, our team can help, or I can help, or business acquisitions. Okay. So costly mistakes. So there's 6 costly mistakes, right? Waiting for the perfect timing. There is no perfect time, right? You should be investing in every market. Just some markets require more due diligence. Some you can make money regardless, right? So during COVID era, you bought something, you were making money regardless because we're doing 2%, 1% interest rates. Now you can't afford to sit on the sideline, but you should still be investing. Just look for higher yields and better investments. Don't be over leveraged, right? Debt is expensive. So you want to, like I say, it's a good buyer's market, but it's not a good borrower's market. So you want to reduce your borrowing and not over borrow. Don't ignore inflation, right? You want to make sure anything you invest in is beating inflation. And you don't want to keep too much cash around because cash is being destroyed by inflation. Don't chase past performance. Stress test all your deals. Make sure you can look for the worst case scenario and you can choose to be good during the worst case scenario. And don't go it alone, right? Look for professionals like Gazette Mortgage or Federal Realty to help you with your investment decisions. Okay, the opportunity is right now, right? There's less competition. It's a buyer's market. People don't have money. Sellers are desperate. It's time to invest, but invest right. Prices are dropping. I'm seeing it every day, right? Every deal we're doing now, we're making sure our clients are going in with major equity every deal. Sellers are motivated and rates drop is coming. So if you can acquire something now where it's a low prices, don't borrow too much. And when rates drop, you can refinance and get best of both worlds. Okay. So as you can say, so our companies, we are here to help. We have real estate, mortgage, insurance, and business acquisition. So if you want to talk about any of these, please put your contact in the chat and we'll have someone follow up with you. All right, we're wrapping up here. So your next action plan, audit your current portfolio, right? Look at all your assets created bucket by bucket and look for things you can adjust in your portfolio. See if it still makes sense or doesn't make sense. Like, does having this make sense? Does having that not make sense? Offload what does not make sense and rebalance to what makes sense. Move idle cash to work. Remember, idle cash is being crushed by inflation. So you got to move it to work. Now, don't move your emergency fund to work. Don't move your don't move things that you need to live in the next 1 year to work. But anything extra, start deploying in a very high return opportunity. Identify your first deal. If you need help with that, let me know. I'll help you. I'll have someone help you with that. Get pre-approved for your financing and partner one of our team members. That's it. I'm going to pause we have about 10 moments for questions, and then we're up for the day. Any questions? I'm going to kind of go around the room to see if we have any questions.
On the finance instruments, you talked about, you mentioned some mutual funds. I think there was one you said you use. Is it SCH? Basically, my question is if you've got some stocks or mutual funds that you recommend. I was trying to write down the names so I can look it up.
Yeah, can you see my screen?
Yes.
All right. So the highest recommended is just the S&P 500 index funds, right? VOO, IVV, and those kind of things. They're broad. It's about 500 companies. They have the most stable returns, about 11% annual, 2% annually. For the past 5 years, they've averaged around 13.4% to 14%. But if you want high dividend stocks, high dividend ETFs, these three are what I'm recommending: VYM, SCHD, and HDV. I personally invest in SCHD. It's about a 4% dividend a year. So it kind of has about 100 different high-paying dividend companies. I think the top 5 is Chevron, Verizon, and those ConocoPhillips. Those guys pay high dividends. So on average, about 4%. The past 1 year, it's done about 20% appreciation, right? So when you add the appreciation and the dividends, are about 24% thereabout. Now, on the long term, the VOO and IVV, the S&P 500, they do better. Even though they have a lower dividend yield, those ones have about 1.3% dividend yield for those, but they appreciate more because those don't have they have more of those fast growing companies, the Nvidias, the Teslas, you name it, right? They have those high yield, fast growing companies with lower yields. So having a balance of both, maybe a part VOO, part SCHD. Personally, I like to have on my ETFs, I have half S&P 500, half dividends, and then the other part of my portfolio is like about 5 to 6 individual stocks that I believe over the next 10 years will outpace the ETFs. Does that answer your question, Collins?
Yes, thank you. I appreciate it.
Thank you, sir. Grady, do you have any questions, Grady? We have about 8 more minutes before we wrap up.
Yeah. Can you hear me?
Hey, Grady, we can hear you. Yes, sir.
Yeah, I was thinking about the equity of like if you buying a lot and getting the house built and force the equity on that.
Mm-hmm.
Yeah, that's another would that be another option?
Absolutely.
Okay.
So typically, when you build, you can for the most part build for less than you can buy. But of course, the building has a hassle factor, and it's also higher risk. So we say higher risk, higher reward. So if you know what you're doing, yes, you can make more money by building and force equity that way. But if you don't know what you're doing, it's more costly and more expensive to build. You're better off just going to a builder and try to get a discount from them than to buy your own land and to build it, unless you know what you're doing. And most of us don't know what we're doing when it comes to that. So when we hear high risk, high reward, we hear the reward, but we don't hear the risk. But the risk is very real. I see a lot of people that buy land and try to build, end up losing a lot because they're not very familiar with what we're doing. And everyone, please welcome Miss Dolly Lofton-Makin. Give her a round of applause. That's my wife, and she's here representing for us. Please give her.
Hello.
She just joined us here. Thank you, Dolly, for joining us. I know she's very busy at home. All right, Grady, hope I answered your question, Grady. Any other questions about 6 more minutes? Any other questions?
Yes. So I have 2 questions. The first is about the dividends one. So I've been like deciding whether to do it or not. And I guess this is not emergency fund, but what money would you use? Like for example, what I was thinking is like I just have money sitting there. I'm looking for the best opportunity to buy some stock, but like they're not in the right price. Of course, I'm dollar cost averaging. It's like below the boat money. So I was thinking about putting some into this dividend. Is that kind of like how you will go about it? That's my first question.
So, by dollar cost averaging?
No, like this dividends, the dividend stock one. Like I'm trying to figure out what money would you put in there. Like it's not emergency fund, but like let's say you have some money sitting aside that you want it to be used, but you don't want it sitting in high yield. You want to get a little bit more. Is that the kind of money you would put into this high yield dividends stock?
Exactly, it is. It is, right? So the way I look at it generally is you want to have your personal home, which I'm sure you already have, and your retirement account, which you already have, right?
Mm-hmm.
You have your emergency fund, right?
Mm-hmm.
And then after that, you want to start layering it into half into more real estate, the other half into the financial instruments, right? Now, those that you can have divvy up that financial instrument into dividend stocks, index funds, or individual stocks or bonds, right? I generally do bonds in times where I think everything's overvalued, right? So when things are really, really hot, I start doing more bonds, right? Or when rates are high, I start doing more bonds. Or when things when stocks start coming down, I start doing more stocks, right? But the way I go about it is just doing dollar cost averaging. Every Monday, I look around my extra money, like you said, Josephine, your extra money, and I buy something every Monday. I buy something every Monday. So whether it's high or low, I'm buying every Monday. That way I can dollar cost average into the dividends ETFs or the index ETFs.
I see. Okay, that makes sense. And then in terms of the business slide, I wanted to know like what kind of service do you guys actually provide in terms of helping people with trying who, like, for example, if you're trying to buy something to a small business to SBA loan, like I'm trying to figure out what are all the servicing you guys provide?
Yeah, definitely. So there's two services we provide there. One is for the financials, right, to help you get the loan. So we have a loan broker that deals with SBA and a conventional loan, so can I get the loan to acquire a business. And the other is more like a retainer. Say, hey, Victor, can you have someone on your team, one of your business brokers, that can help me acquire a business in this buy box, right? So buy box usually means, hey, I want to buy something like this. If you don't have a buy box, we can help you create a buy box as well too. So, okay, I think with you should look something in the financial space, something in the home building space, something in the tech space, something in whatever the case is. Help you create a buy box, and then as a retainer, so okay, here's a retainer money. Go help me look for this deal, right? Because you want to use a professional. Help me look for this deal. Help me analyze this deal. Help me do a due diligence for this deal, and what we call a success fee. And when you close the deal, they get paid for helping you close a deal. And very similar to real estate as well, most of the payment they get comes from the loan proceeds that you're getting, and it's already underwritten as part of the deal already. We can help you with that. So one with the financing, and two with the deal sourcing, and then finally get a success fee for helping you closing on the deal.
Oh, I did not know you guys do that. I'm interested in the deal finding part of it. I'm gonna message, I think, the lady on your that you mentioned her name. Okay, thank you. I didn't know you guys do that. Thank you.
You're welcome. Okay, we have 2 more minutes. Any questions, Dolly Lovemaking?
No, sir, I have no questions.
Okay, thank you. You have me to answer your questions for you. All right. Alan, Kunle, Quebec, Andy, Mikun, Rich, Ty, Wande.
Can't think of any, sir.
Thanks so much, Kunle. Thanks for joining, Kunle. Really appreciate you.
Absolutely.
And Kunle Amo also has perhaps more information than I do on this thing, so feel free to reach out to him as well too if you have any questions. Josephine, thank you. Got your message. Got 1 more minute. Any save rounds? Tywood, you got it. Thank you. All right. If no one else, thank you so much for everyone. We're going to do another one in about 2 weeks from now. To kind of just keep delivering value for our community. Thank you and have a blessed week. If you have any questions, feel free to reach out to me directly. Is there a number to call when ready? Yes, Wande. Wande, can you put your contact in the group chat, and then we'll reach out to you. TK is on standby to reach out to you one day. Put your phone number in there, and TK will reach out to you right away. All righty. Do we have that? Okay, got it. TK, did you get that? 646-299-7717.
Yes, I did.
I got it.
Thank you, Andre.
Thank you all. Everyone have a good week, good week, and we'll do this again. I'll see you soon.
Thank you.
Thanks, Collins. TK, you can end the meeting.